Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is January 31st, the last day of the month. So on into February we go. If you haven't completed your trading for January, now you are out of luck because the market is closed. It's about 4:41 p.m. on Tuesday, January 31st. Today we are going to cover Caterpillar. It is out of the industrial sector. Let's jump right into the video. And if you look over here to the left, you will see all the brands that Caterpillar under their umbrella here. Mostly, right, CAT, CAT. You might have seen their equipment if you've driven down the road past a construction site, industrial construction site. Some of the other ones at Perkins, Progress Rail, STEM, Caterpillar brand, SPM Oil and Gas, Solar Turbines, Turner, FG Wilson, right, Asiatrack. About Caterpillar, with 2021 sales and revenue of $51 billion, Caterpillar Inc. is the world's leading manufacturer of construction and mining equipment, off-highway diesel and natural gas, industrial gas turbines, diesel electric locomotives. For nearly 100 years, we've been helping customers build a better, more sustainable world and are committed to and contributing to a reduced carbon future. Our innovative products and services backed by our global dealer network provide exceptional value that helps customers succeed. Caterpillar does business on every continent, principally operating through three primary segments: construction industries, resource industries, and energy and transportation, and providing financing and related services through our financial product segment. So basically there are their three pillars, right? Construction industry, resource industry, and energy, transportation, and their financial segment. And if you want to know more about them, go ahead and check them out at www.caterpillar.com. That is their homepage. Now, the reason we are taking a look at them today, they were down 3.52%. We are still talking about Caterpillar Inc., ticker CAT. Closed out the day January 31st at $252.29. 52-week range as low as $160.60, as high as $266.04. So definitely closer to that 52-week high. Average volume 3.1 million. Today's was 10.6. Market cap of $131.29 billion, beta of 1.10, so they are more volatile than the overall market. PE ratio of 18.36. Obviously, if we were to get them back closer to this 160 here, that PE ratio would be much lower. Earnings per share, EPS, is $13.74. Earnings date was today, so must be something in their earnings that people didn't like. If it dropped a little over 3% here. Actually looks like it's down a little bit more in the after hours. For dividend, $4.80. They are a quarterly payer, so divide by 4. We'll see that quarterly payout here in a minute. And dividend yield of 1.84%. So this is a low yield here. Again, obviously, if you got them closer to this 160, I think you'd be back above probably 2% pretty easy there. But right now, very low yield. This is one where honestly, if you wanted to go with the ETF route, most ETFs are yielding higher than this, right? Ex-dividend date, January 19th. So you have passed that date already. If you were to pick them up now, you would not be in line for their next dividend payout. You would have to wait for the one after that. And according to Yahoo Finance, they have a one-year target estimate of $242.09 per share. So this actually tells me that they feel this is a little overvalued at $252. If they're saying over the next year it's going to be worth $242, it's actually $10, a little right around $10 per share overvalued. That's at least according to Yahoo Finance, where I pulled this information. I am not affiliated, just one of the sources I like to look at for information. And I always recommend more than one site. So stockanalysis.com is another one that I like to look at. And the 34 stock analysts, they've had to take a look at this. Call it a consensus buy, even though they have, which doesn't make much sense to me because they have a low estimate of $176.75, which would be a 29.94% decrease in the price. Their average is right in line with what Yahoo Finance was saying at $242.19, which would be a 4% decrease in price. And if it happened to hit their high of $309.75, that would be a 22.78% increase in the stock price. But anytime I see a low and even the average estimate below the current price, I see overvaluation. That's just my opinion. All right, I'm not saying it's overvalued or it's undervalued. I'm just saying I'm seeing their estimates at 242 for the average and 176 for the low. and that tells me that it shouldn't be a buy. It should be a hold at most, and maybe even a sell, because that tells me they're expecting some downside. Same with the Yahoo Finance. So this is where I would typically show you my position. I do not have a position in this. They are a quarterly payer. They pay out $1.20 per share. Low payout ratio, 32.7%. Dividend growth, 7.94. So decent dividend growth and a low payout. This would be one I may be interested in at the right price, but again, in my opinion, this one may be a little overvalued. And that is really it. I know we ran through this one pretty quick. These are supposed to be quick hitters. Not much to see in this one. Again, it's one I feel is overvalued, but a lot of green in the market after yesterday's downturn. So this was one of the few ones that was down and down significantly. Anything above 3% is down a lot on a day. So I thought we would take a look at it. My opinion on this one, little overvalued. Maybe if there are further pullbacks and it got back down towards that 160, 170 range, might be worth a look again. But at its current price per share, I would not be interested. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel down below. Join me on this journey to financial freedom. Hopefully, you are on your own journey as well. And drop a comment down below. Let me know what you think of Caterpillar. Is it in your portfolio? Is it one you're watching? Is it one you're avoiding like the plague? Let me know if there are other options that you like better. I know Deere is one that people look at as well if they're interested in something in the equipment space there. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And with that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your educational and purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice, counsel, or a certified financial advisor.